Gold prices surged to unprecedented levels as global investors intensified their search for safety amid mounting geopolitical and economic pressures, while silver prices moved sharply higher, approaching another historic milestone. On Thursday, spot gold extended its record-breaking rally, edging closer to the $5,600 per ounce level, reflecting strong demand for safe haven assets during a period of heightened uncertainty. At the same time, silver prices climbed to within striking distance of $120 an ounce, underlining growing investor interest across precious metals markets. As of 0:39 GMT on Thursday, spot gold was trading at $5,511.79 an ounce, marking a gain of 2.1% on the day. Earlier in the session, prices touched a fresh all-time high of $5,591.61 an ounce. The move represented a continuation of a rally that has already seen gold break through several key psychological thresholds in recent days, including the $5,000 level earlier this week. Market participants have attributed the strength in gold prices to a combination of geopolitical developments, economic uncertainties, and broader structural shifts in how gold is perceived within investment portfolios. Analysts at OCBC noted that rising government debt burdens, ongoing geopolitical concerns, and unpredictability in policy environments have accelerated what they described as a structural re-rating of gold's role in global portfolios. According to the analysts, gold is increasingly viewed not only as a hedge during crises or periods of inflation, but also as a neutral and reliable store of value that offers diversification across a wide range of macroeconomic conditions. This reassessment of gold's role has coincided with a sharp acceleration in prices. Gold prices moved above the $5,000 mark for the first time on Monday and have since gained more than 10% over the course of the week. The rally has been driven by several reinforcing factors, including strong safe haven demand, firm buying by central banks, and a weaker U.S. dollar, all of which have contributed to sustained upward momentum in the market. Despite the speed of the recent gains, market commentary has reflected both awareness of the rally's intensity and recognition of the factors supporting prices. IG market analyst Tony Sycamore commented that while the parabolic nature of the rally suggests that a pullback may not be far away, the underlying fundamentals are expected to remain supportive throughout 2026. He added that this backdrop positions any potential dips as attractive buying opportunities, highlighting the resilience of demand underpinning the gold market. Geopolitical developments have played a significant role in shaping investor sentiment. In one of the key international headlines this week, U.S. President Donald Trump urged Iran on Wednesday to come to the negotiating table and strike a deal concerning nuclear weapons. He warned that any future U.S. attack would be far more severe. In response, Tehran issued a warning of its own, threatening to strike back against the United States, Israel, and those who support them. These exchanges added to broader geopolitical tensions that have encouraged investors to seek assets traditionally viewed as stores of value during periods of instability. On the U.S. policy front, attention has also been focused on the Federal Reserve. On Wednesday, the central bank decided to leave interest rates unchanged, a move that was widely anticipated by markets. Federal Reserve Chair Jerome Powell stated that inflation in December was likely still well above the central bank's 2% target. The decision and accompanying comments reinforced expectations that monetary policy conditions would remain restrictive, contributing to the broader economic environment influencing investor behavior. Gold's strong performance this year follows an already substantial advance in the previous year. According to the latest figures, gold has gained more than 27% so far this year, following a 64% jump in 2025. The scale and persistence of these gains underscore the strength of demand and the degree to which gold has captured investor attention amid ongoing uncertainty. Additional support for gold prices emerged from developments within the digital asset sector. On Thursday, prices drew further backing from news that crypto group Tether plans to allocate between 10 and 15% of its investment portfolio to physical gold. This move highlighted the continued convergence of traditional and alternative asset classes, as well as the appeal of physical gold as a store of value even among participants in the cryptocurrency space. High gold prices have also been reflected in consumer behavior, particularly in key Asian markets. With prices elevated, customers have been crowding into stores in Shanghai and Hong Kong that sell the precious metal. Reports indicate that some buyers are placing bets that prices could rise even further, adding to demand at the retail level and underscoring the widespread interest in gold across different segments of the market. While gold dominated headlines, silver also recorded notable gains. Spot silver rose 1.3% to $118.06 an ounce, after reaching a record high of $119.34 earlier in the session. The metal's advance brought it within a narrow range of the $120 mark, reflecting strong momentum and renewed investor attention. Silver prices have been supported by a combination of factors, including demand from investors seeking cheaper alternatives to gold, ongoing supply shortages, and momentum-driven buying. The white metal has jumped more than 60% so far this year, marking a significant increase and positioning silver as one of the standout performers among major commodities. Analysts at Standard Chartered commented on the underlying dynamics of the silver market, stating that the market is forecast to deliver yet another deficit this year. They noted that the real tightness in the market stems from the reduced availability of above-ground stocks, a factor that has contributed to sustained upward pressure on prices. Other precious metals also saw movement during Thursday's session. Spot platinum rose 0.5% to $2,710.20 an ounce after having hit a record high of $2,918.80 on Monday. In contrast, palladium prices declined, falling 1.3% to $2,048.14 an ounce. Together, these developments paint a picture of a precious metals market being shaped by a complex mix of geopolitical tension, economic policy signals, investor demand, and supply constraints. Gold's approach toward the $5,600 level and silver's advance toward $120 underscore the intensity of current market dynamics and set the stage for a closer examination of the forces driving these historic price movements. As this report continues, we will take a deeper look at the specific drivers behind gold's latest surge, the broader macroeconomic and geopolitical context, influencing investor behavior, and the factors shaping the outlook for silver and other precious metals as we move into the next part of our detailed breakdown. Part 2. First half of the detailed news breakdown. Continuing from the earlier overview, the latest movements in precious metals markets have unfolded against a backdrop of intertwined economic signals and geopolitical developments, each contributing to heightened investor attention. Gold's advance toward the $5,600 per ounce level has not occurred in isolation, but has instead reflected a convergence of multiple factors that have steadily reinforced demand. As trading progressed through the week, the metal's performance underscored how sensitive markets have become to broader signals of risk and uncertainty. The rally in spot gold, which saw prices climb to $5,511.79 an ounce by 039 GMT on Thursday, represented a notable daily increase of 2.1%. This followed an earlier peak during the session when prices reached a record $5,591.61 an ounce. These figures mark the continuation of a rapid ascent that has defined recent trading as gold pushed past milestone levels that previously stood as long-term resistance points. One of the central themes underpinning this rally has been the perception of gold as a reliable store of value amid shifting economic conditions. Analysts at OCBC emphasize that rising government debt burdens have played a key role in reshaping investor attitudes. As fiscal pressures grow across major economies, concerns surrounding long-term debt sustainability have prompted investors to reassess how they preserve value within their portfolios. According to the analysts, this reassessment has accelerated what they described as a structural re-rating of gold's position among global assets. Geopolitical considerations have also weighed heavily on market sentiment. Ongoing international tensions, combined with uncertainty surrounding policy direction, have reinforced the appeal of assets traditionally associated with stability. OCBC analysts pointed out that gold is increasingly viewed not only through the lens of crisis protection or inflation hedging, but as a neutral asset that can provide diversification across a broad spectrum of macroeconomic environments. This perspective has gained traction as investors navigate conditions marked by overlapping economic and political risks. The pace of gold's rise has been particularly striking. Prices crossed above the $5,000 threshold for the first time on Monday, an event that drew widespread attention across financial markets. Since then, gold has gained more than 10% over the course of the week. Such a move, occurring within a short time frame, highlighted the intensity of buying interest and the degree to which demand has outstripped available supply at prevailing prices. Several drivers have been cited as contributing to this momentum. Strong safe haven demand has remained a consistent theme as investors sought assets perceived to hold value during periods of uncertainty. In parallel, firm buying from central banks has provided additional support, reinforcing confidence in gold's role within official reserves. A weaker U.S. dollar has also played a role, making gold more attractive to holders of other currencies and amplifying the upward pressure on prices. Market commentary has reflected an awareness of both the strength and the speed of the rally. IG market analyst Tony Sycamore noted that the parabolic nature of the recent advance suggests that a pullback may not be far away. However, he also pointed to the underlying fundamentals, which he said are expected to remain supportive throughout 2026. This combination of short-term caution and longer-term confidence has shaped expectations among market participants, even as prices continue to set new records. Beyond market mechanics, geopolitical developments have remained a central focus for investors. In a key diplomatic exchange, U.S. President Donald Trump urged Iran to engage in negotiations and strike a deal regarding nuclear weapons. He warned that any future U.S. attack would be far more severe. Iran responded with its own warning, threatening to strike back against the United States, Israel, and those who support them. These statements added to an already tense international environment, contributing to the sense of risk that has driven investors toward safe haven assets. Such geopolitical tensions have often been associated with increased demand for gold, and recent events have followed that pattern. As headlines surrounding diplomatic confrontations circulated, market participants factored in the potential for escalation, even as official outcomes remained uncertain. This environment reinforced the appeal of gold as an asset perceived to retain value during periods of heightened global risk. At the same time, developments in U.S. monetary policy have influenced investor positioning. The Federal Reserve's decision on Wednesday to leave interest rates unchanged was widely expected, yet it carried significance for market sentiment. Federal Reserve Chair Jerome Powell stated that inflation in December was likely still well above the central bank's 2% target. These remarks underscored the persistence of inflationary pressures and provided context for the central bank's cautious approach. The interaction between monetary policy and gold prices has been closely watched by investors. While interest rate decisions can influence the opportunity cost of holding non-yielding assets such as gold, the broader economic message conveyed by policymakers has also mattered. Powell's comments suggested that inflation remained a concern, reinforcing the narrative that economic conditions continue to warrant careful monitoring. Gold's performance in 2026 has built on substantial gains recorded in the previous year. After rising by 64% in 2025, the metal has already added more than 27% so far this year. This continuation of strong performance has highlighted the durability of demand and the extent to which gold has remained at the center of investor strategies across different market cycles. Support for gold prices has also emerged from less traditional quarters. On Thursday, news that crypto group Tether plans to allocate between 10 and 15% of its investment portfolio to physical gold provided an additional boost. The decision signaled ongoing interest in gold as a tangible asset, even among participants within the digital asset sector. This development illustrated how gold's appeal has extended beyond conventional financial institutions to encompass a broader range of market participants. Consumer behavior has further reflected the impact of rising prices. In major Asian markets, particularly Shanghai and Hong Kong, reports indicated that customers have been crowding into stores selling physical gold. Despite elevated prices, demand has remained robust, with some buyers betting that prices could continue to rise. This activity at the retail level has underscored the widespread nature of interest in gold, spanning both institutional and individual investors. While gold has remained the primary focus, silver's performance has also attracted attention, setting the stage for a closer examination of its market dynamics. Silver's rise toward the $120 mark has occurred alongside gold's rally, reflecting interconnected trends across precious metals. The factors driving silver, including investor demand and supply considerations, will be examined in greater detail as this report continues. In the next part of our coverage, we will turn our focus more closely to silver's record-setting performance, the specific supply and demand dynamics influencing its price, and how movements in other precious metals such as platinum and palladium fit into the broader market landscape.